You're listening to international investment advisor Doug Goldstein on the Goldstein on Gelt show, the financial show where we'll talk about how you can make the most of your money. With all the confusing financial chatter bombarding you each and every day, Goldstein on Gelt will give you the practical information you want and need about living a financially stable life. Here's your host, money maven Doug Goldstein.
Okay, we are back. I'm very happy to have on the Goldstein on Gelt show Richard Wilson, who founded the Family Offices Group and is the president of the Richard Wilson Capital Partners, and he's the author of the best-selling book, The Hedge Fund Book, a training manual for professionals and capital-raising executives. Richard, a pleasure to have you.
Thanks for having me.
So you do a lot of work with family offices and hedge funds, and I've got a number of questions about that. Before we go into it, though, let's just start by defining some terms, both the terms, a family office as well as a hedge fund.
Sure. Well, family office is really just a holistic wealth management firm that manages kind of the full balance sheet financial picture for the ultra-wealthy. So in other words, it's a wealth management firm for people that have $20 million or more, typically, because those people have different needs and challenges financially. A hedge fund, there's over 15,000 of them in the world, so they are of all different types. But the best way to understand one is that if you know what a mutual fund is, a hedge fund is typically a more private investment fund that's able to use more investment tools and strategies to pursue their strategy. And what makes a hedge fund unique is that they almost always charge a management fee and also a performance fee. So when the hedge fund does well, their fees go up. When they don't, then they have less fees. So those are some of the unique characteristics about both these types of industries, I guess.
And just in terms of regulatory oversight, is there still a difference between mutual funds and hedge funds?
Yes, I mean it's different in Singapore than Russia than the United States, but in almost every country around the world, mutual funds are regulated more heavily, but at the same time, because of that heavy regulation and rules, they're able to accept money from more types of investors, where hedge funds are typically restricted. Sometimes in some countries you can't run a hedge fund at all or even invest into a hedge fund. And in other countries, it's a little bit more lax, but you have to meet certain wealth minimums because governments see it as more risky.
Mm-hmm. So let's talk about, you mentioned family offices for families of $20 million or more. Are hedge funds available or even appropriate for people not at that level?
Well, I know a lot of investors who are under $20 million in net worth, and they have invested in hedge funds, but the appropriateness of the hedge fund depends on several different things: the risk factors and preferences and the situation the individual is in. For example, is the person that's worth $5 million retired in a retirement home, but they have high monthly expenses because they live in Monaco? Or do they have $18 million and they're a 24-year-old that was working at Facebook as a programmer when it went public, and they live in San Francisco and they rented an apartment just outside of the city? I mean, it's completely different. And the other side of that, which makes that answer even more complex, is that there's hedge funds that are very conservative and they focus just on capital preservation. There's hedge funds that focus on just lending to real estate developers. And then there's very aggressive hedge funds at the other extreme that are taking big risks and trying to get big 20, 30% returns every year for their investors. So it depends on the person, first and foremost, and then also on the hedge fund that you're referring to make sure it's appropriate.
So I'm glad you mentioned a couple of the different types of hedge funds that are out there, and there are many, many more. The name also, I think just because this is an educational program, I want to focus on this for a minute. The term hedge fund doesn't necessarily really mean that it's a hedge at all anymore. It just means it's some sort of non-standard investment pool.
Yes, basically, the term came up because in the 1960s there was a fund which, basically would short some securities in the marketplace as well as go long. So in other words, bet against a few companies, but also bet for typically a majority of groups in their portfolio. And they would see this as kind of hedging their risk. So for example, if you would invest in cosmetics, well, there's 20 major cosmetic companies. We're going to bet on 10 of them going up. I think these 10 are strong, and these 3 are quite poor. They have poor cash management. Looks like they're struggling to meet their estimates each quarter. And so some of those funds might, short or bet against those 3 and bet for those 10s. If the market goes down, you would bet that those 3 weak ones would really nosedive while the others would hopefully be okay long term. And that's where the name, hedge first came from, is doing those innovative type investments that might not have been allowed within a regulated standard pool of investments sold to the general public. But since then, it's just grown, like you said, basically to mean that usually there's a performance fee, and typically there's extra requirements to be able to invest in that hedge fund.
Okay, so the hedge funds today are not necessarily designed to protect portfolio. Not necessarily, meaning that there may be some that are, but as a general rule, if someone buys a hedge fund, he should not necessarily think, well, now my whole portfolio is going to be safer.
No, not at all. And I think the most important point when it comes to deciding whether to invest in hedge funds or not is that you should work with someone who's licensed, regulated, trained, and they've done this dozens of times before. And it's something I tell ultra wealthy families as well. Like, don't be the training wheels for some attorney or consultant who wants to grow their business into this lucrative sounding area. Like, you want to find someone who everybody knows has a great reputation, has many references. You can verify that they're licensed and regulated, and anyone who's serious about providing value within hedge funds or family offices should be all those things. And one general business rule that I always live by is that you should always ask the person if they have 3 references of people that have worked with them once and then have come back to work with them again. Because if they don't have, those first 3 people that have done that, you don't want to attempt to be the first. So you should always just make sure that there's people that have done business once and then came back again to work with these experts that you're consulting with.
That sounds like wise advice. We're talking to Richard Wilson, who is a consultant to family offices. He's also written a number of books. One of them is the Hedge Fund Book, a training manual for professionals and capital-raising executives. And he also wrote a book called the Family Office Book, Investing Capital for the Ultra-Affluent. When people invest in hedge funds as a part of a long-term portfolio, are there certain types of hedge funds that are more appropriate for, let's say, someone who is in his 30s, 40s, or 50s who sees this portfolio going out for 10 or 20 years or more?
I would say that, I'd be hesitant to, recommend any because everybody's situation is different. But one thing I can say is that a recent trend with the ultra-wealthy families I'm working with, and what I'm seeing since 2008, 2009, is that a lot of these families and hedge fund investors want to invest in strategies that, one, they can understand and they can see where the value is being created and understand the link between the team expertise and the value being created or the strategy of the investment fund. And 2, a lot of them prefer a hedge fund that has some component which is physical, tangible, something with real collateral or real asset value, so it's not all an algorithm. That said, a lot of big hedge fund investors, pension funds, endowments, foundations, etc., are investing in hedge funds that don't have tangible assets. And but I just think that there's an extra interest in strategies which just feel more concrete and real nowadays than there was, 5 or 6 years ago.
Mm-hmm. Yeah, that's one of the things that I've said for many, many years. My day job is that I'm an investment advisor here in Jerusalem, and I help clients develop portfolios, and we do a lot of long-term planning. And one of the things I've often said to clients when they tell me, Doug, you just handle it all, you know more about it than I do, is I say, listen, I'm willing to handle a lot of the details, but if you don't understand the big picture of what's going on, A, you either have to take the time to understand, or to B, maybe this just isn't for you. Because I think it's critical at the end of the day for people to understand what's going on. Again, not necessarily all the day-to-day, because that's why they hire investment professionals. But to know what types of investments they have, I think, is critical.
Right. Yeah, for sure.
So there's something called a certified hedge fund. Could you explain what that is?
Sure. Well, what we offer, and we started this in 2006, 2007, is the Certified Hedge Fund Professional. And it's a designation or certificate platform. And another way to look at it is it's really just a training platform. And when you enroll, you get to listen to several hours, I think it's 9 or 10 hours of audio interviews with hedge fund experts and hedge fund managers. You also get over 150 video modules. You can study and learn the fundamentals of hedge funds, learn the lingo of the industry, learn about the different hedge fund investment strategies, etc. And then when you're ready, you can take an online examination. If you pass the exam, we send you a hard copy of your certificate and a leather diploma holder. No matter where you are in the world, we mail that to you so you can display it in your office or to show people that you've, taken time to study the industry and you're a student of the space and you're dedicated to, kind of moving up your knowledge so you can be more effective in the industry at serving clients or working for a hedge fund.
I guess that is important because the hedge fund industry, I've been in the investment industry for 20 years, and when I look at hedge funds, they're much more complicated. It's not the same as the other types of, let's say, normal investments that people use, stocks, bonds, mutual funds.
Sure.
And I do think that people who want to be selling them really do need to have a different education or more education in that area. And unfortunately, what I've seen around is that a lot of times clients come to me and say, hey, Doug, so-and-so sold me a hedge fund, and I know that the guy who sold it probably knows less than the client who bought it, and it's really really a big problem. So,
yeah, it happens quite often. I think that's the number one value that we're adding, is that people can take the program and learn the fundamentals relatively quickly. And we don't claim you'll be an expert when you get out of the program, but it's a good entry level, get familiar with the industry, type program, so people aren't kind of blindsided by things as often.
Yeah, I think that's smart. So finally, when someone's looking for a hedge fund, what are the questions that an investor should ask?
The most important question, and you hear this when you talk to venture capitalists, when you talk to angel investors, all types of investors, but the most important question is who is on the team and exactly how can you connect the dots of their experience and expertise with an investment strategy that provides them with a competitive edge. So it's the team's knowledge and ability to get things done together with that strategy, which hopefully is very repeatable and consistent and can produce consistent returns. So there's a lot of due diligence related questions and references and reputation and looking at their office and looking at their back office operations and past audits and many different things that you should hire.
What about, how about custodianship, meaning just where that that your money is held in an account for you and doesn't end up being in someone else's account that he can just run away with?
Yeah, for sure. There's literally over 100 questions you should be asking when you invest in a hedge fund. Some are routine, and you're just making sure that the basics are in place, and then some are very critical and are going to pertain to your unique preferences for what type of people you want to work with.
Wow, and for sure you need some expertise there. Okay, we've been talking with Richard Wilson. Richard, we're just about out of time now, but in the last few seconds, can you tell me how can people follow your work?
The two easiest ways, and we've built our whole brand off of this, is just providing free thought leadership so people can get to know us as a company. Our Hedge Fund Book, we have an ebook version that can be downloaded for free, so you can get a taste of the real book, and that's at hedgefundsbook.com. And then for our Family Office book, you can get 2 or 3 chapters for free by going to familyofficereport.com. So it's hedgefundsbook.com and familyofficereport.com.
Okay. Richard Wilson, thanks so much for your time.
Great. Thanks for having me.
You've been listening to the Goldstein on Gelt Show with money maven Doug Goldstein. Doug's weekly radio show is heard around the world, but if you miss it, you can download the podcast at www.goldsteinongelt.com. The Goldstein on Gelt Show gives you up-to-date financial ideas so you can get on the path to financial freedom. If you'd like your questions answered on the air or off, send Doug an email to doug@profile-financial.com. It's your money for your future, so join Doug every week to build your wealth on the Goldstein on Gelt Show.